The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the fourth hour of the programming here at TFNN, and of course, started off with John Logan, great show, right into Larry Pesavento, another terrific show. Tom O'Brien comes in and gives you a really good analysis as well for using his techniques. We've got all these different techniques. It's fabulous. I come in here with mine, using the Chapman methodology of looking for the most identifiable lowest low bar. You expect at least 4 higher peaks. I grade them. Peak A, uppercase. Peak B, a higher high is peak B. A higher peak is peak C. Peak D is where you expect that something else could happen. And here we are. We're looking at a situation that says the 120-minute E-mini down 10 at 2083. Went from 2080 on the 3rd. Was that the 3rd? Yep, it was the 3rd of August. Goes 4 peaks higher, peak A, peak B, peak C, pulls back sharply, and there has that skyrocket up yesterday to 2107. It goes to leg D, and then the very next bar has a high. Instead of 2107, it has a high of 2099, sharp pullback. And what does that do? That says essentially that was a peak D, and now you're getting the leg B to the downside. Here's a leg A. Then it becomes a trough A. Downside, we call them troughs. You get to a leg B, it'll be a trough when there is a higher low bar. Meantime, you're getting basically that lightning rod A to B equals C to D to the downside. Been talking about this for quite some time. Bias has been to the short side, although we did take a stab at a long position yesterday. A long position in a stock, I know that maybe once or twice we've gone into this particular stock, but it has just been hammered. The whole sector is just decimated. And I had a reading, you always hear everyone on the market says, you cannot time the top, you cannot time the bottom, you want to just get in after the turn has been made. I talk about the tide all the time. And that's the modus operandi of the Chapman wave is to at least attempt, using the methodology that we have, because it is so refined, to be able, using shorter time frames. I'm not going to talk about the top in a monthly chart until you've got the 10 minutes, the 30 minutes, the 120 minutes, the daily, the weekly, all in sell modes, and then finally you can get that top in the monthly. So what we're looking at here is that in the E-mini, you made a double top at 21.26.25. Then it hit that. That was, let me give you the date. That was fascinating. That V-shaped return is the Groucho Marx eyebrows pattern that I often talk about over the years. Not often, meaning every day, often over the years. 21.26 was hit on the week of the 22nd of, let me put that in right here so I don't have to keep looking it up. A week of May the 22nd. Oops, 22nd. There you go. Retested 3 weeks ago. And that was the week of the 24th of July. May as well put that in. Why not? 7. Did I say 26? Yeah, 26. And the exact to the quarter, it hit it. And then you come down. You break under the 9-period moving average, you go above it. Now we're back under the 9-period moving average in the weekly chart. The technicals are horrible. The MACD is declining. I've been talking about this, that when price continues higher, when the technicals, even on rebounds, fail to confirm that rally, you've got to be careful because it makes you vulnerable to you. It makes the price vulnerable to a sharp slide. So now we've got that sharp slide right there. We've actually made a 1-to-1, I believe. So we could be close to some kind of base of support. Let me just do this. new parallel right there, and it takes you from, I'll move it aside. Oh, we've gone right by it. All right, so that means that we're probably going to test the low of 2081.50 that was made at 4 o'clock on the 4th. Was that 2 days ago? Yeah. So, okay, this is the story. Using the Chapman Wave methodology, I've discussed, and what I usually do with subscribers or any of the courses that I give or any of the webinars, I discuss periodicity. Now, what we talk about in that particular instance is, are there a certain number of bars to the left that can be made to the right to give you a price time match that takes you exactly to or very close to the level where you started off? That's either in an arch formation or a cup formation. Remember, my methodology says that there are only 3 chart patterns. There's a straight line, a cup, and the cup has a part A, part B. It's either a cup or a V-shaped pattern. They have slightly different connotations in the Chapman Wave, but the principle involved is that you're going from one level away from it and then back to it, and you're using a certain time price match, all right? And in the other case, it is an arch formation, arch or an inverted V. And in that particular instance, it has the same principle. Now, my methodology also says, this is methodology just based on experience and having charted for, I wonder how many hundreds or thousands of charts I've actually notated. Hard to say, even now as we're talking. Look at this. This is what I'm talking about. In the Chapman Wave methodology, you go from a particular price. You don't need these technicals. You could do it just on price alone, but that's okay. I've got them right here. It's a little convenient to do that. And what you look for is at a peak E. Here, you see the peak E right there on this 15-second. Some of you would not want to trade 15-second charts. So I don't mind it as long as it's a chart pattern. And what happens is you've gone from the low at 1031 and the E-mini of 2083.25 to that green line, which is the 200-period moving average, to your peak D. At peak D at 1040, so 1040 is 9 minutes. So 9 minutes is really a long time when you're intraday trading for some people. In that particular instance, you went there and you pulled back, and the MACD started to decline, but it held the 9-period moving average and went just a little bit above, went to an E, and then I put a down arrow because the technicals say, hey, this thing should really tank. Well, it pulled back, but it didn't tank. There was when that happens, when you go kind of sideways, it leaves room for one more sudden up spike, a spike that says, fooled you, because the very bar that takes out the previous high, that or the very next bar is like the H pattern on the downside, the same methodology, reverses sharply, and within moments you're back to where you were, having covered your short, maybe even gone long because you said, oh, I'm wrong, and that's the fooler. And then what happens is you go right by that. Now, when I talk about left side, right side price time match, I talk about a plumb line. Here's the plumb line. Look at this. Right there, okay? That takes you to that peak F. That's the 6th highest peak. That says that based on this methodology, you should get an arch formation. Remember, only 3 patterns, straight up or up and down, testing the break point, the support or the resistance. And in this particular instance, you went to that peak F and you started coming down. Down, 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 down. And it said, based on this left side, LS, left side, right side, to the exact plumb line, it said that at having gone to the high of 2088.75, hey, 2083 to 2088, not bad for 9 minutes worth of work. So now what happens is, pulls back, and right on this bar at 1106, you should be coming back to those 4 base levels of 2083.25. What happens? You go to 2083.00. The only time it broke that left side support was the exact to the 15-second bar. Exactly. and now it's gone underneath it. And that's not a good sign because it says that you've lost an opportunity to within 1 or 2 bars to close underneath the left side low bar support. And that says you can now rally to the first area of resistance, which would be like a 9 moving average or a peak. In this case, it would have been a peak all the way to 2085.25. Instead, we plummeted down to 2080.50. All right, I just want to do that. I like to do things in real time. That's what we're all about here, showing you our techniques in real time. After all, theoretically, I could say to you, oh, isn't this just perfect? Look, you went down, then you rallied up, and then you came down. I want to show you things, how they happen in real time. So let's get out of that, and let's go to the numbers. The Dow's down 96 at 17,443. The S&P is down 13 at 2086. The comp index is down 67 at 5,072. The gold is now up 3 at 1088. I think this is the first opportunity that we're going to see some of the commodities at least have an opportunity to bounce. So we're going to see, we'll look at that as we move along. Yes, J and J, I'll look at J and K as soon as I can. Question in the dead. So gold is up at 1089. Silver's up 5 cents at 1461. Platinum's up 1 at 951. High grade copper, oh my goodness, 234. High grade copper. And this is, for how long have we been saying that this is an economic barometer? Didn't mean to do that. HG, look at that. Broke the left side support of 2.40 of January of 2015 in the weekly chart and the arch formation. Peak C minuses are very bad. They always say not only are you going to test the low, but you're probably going to break it and go underneath your left side support. That's exactly what it's done. And let's move this 120-minute chart. Let's make it smaller because I'll have some notation on a number of charts we're looking at. So yeah, we are. What has been my target for gold? My target has been this inside track, the Chapman wave inside track. Gosh, I wanted to show all these things in my CD. Don't even have time to do that. There's just so much to do here. This I drew ages ago, and I said, this is the inside track, up channel support. And this is the area that between, well, depend when, between 230 and basically 237 is an area that says there should be some containment, because if we go right through that, not only is it bad, but you have to start looking at brand new left side support levels. And in this case, in high grade copper, you don't want to be looking at the left side. Why? Because the left side has support down at 1.54 from December of 2008. There's no trough on the way down. And once there are no troughs in any case. So you're trying to find support with these H patterns. Now I have to show you this. Here's the H pattern. Chapman wave methodology. This is my introducing the Chapman wave methodology, only available at TFNN. And we're going to look at right shoulder failures. Right shoulder failure. Oh, there's the music. Chapter 21, right there. And we'll talk about it as soon as we get back. Meanwhile, we've got the dollar down just a tad, and the euro is trying to find some support. I'll be right back.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so we're looking at copper, and we're looking at the monthly chart. The monthly chart technicals are just showing absolutely no sign of strength at all at this particular time. But what are we talking about? We're talking about, what is it, Monday, Tuesday, Wednesday? Third day of the month, a brand new month. So I can't talk about it as if it's a monthly chart closed. I can talk about it as if there are those patterns that I call the lowercase h pattern. What does that mean? Well, there's a technique that I developed many years ago. It's called the right shoulder failure pattern. And this right shoulder failure pattern, here's GM way back when it was at 54, that shows that you make a peak D, E, or F, and you pull back, and then you start to rally. And it isn't you, it's the chart. The chart starts to rally. And it actually is us, because it's the human emotion that says, wow, it's been such a great stock, and now it's just pulled back a little bit, I want to buy it. Except one of the reasons why I also do like to use the technicals, a lot of the time you can just do the naked chart. You're just looking at chart patterns. I'm expecting a D. I get to a D. I'm waiting for the arch formation. Comes back down. There could be a left side, right side arch, or a V shape, etc. So in this particular instance, the technicals are starting to fail, and the price goes below the left side low of importance, right there where I'm pointing. Aha. So now what's the big deal? Well, the big deal is if it takes it out, and you're near the top of the pattern, that it says you could get a 1-to-1 to the downside or greater. And then you have to start looking at even bigger H patterns. So that is the lowercase h. It looks like an H, but it really is, the concept really started with a right shoulder failure pattern, because you can think of it as a head and shoulders here, left side shoulder, right side head, right side shoulder, left side the head, then the right side shoulder, and then it breaks the neckline, the base of support. All right, make it simple. So where are we? We're looking at dozens of these things. You remember this H pattern that goes to a lowercase m pattern? We saw that in gold. We saw that in, we've seen it in crude oil. Look, there it is, same pattern. What's the difference? No difference. Crude oil, bam, look at that. Crude oil on its way down, 44. From does do the 1-to-1. Oh, I don't even want to talk about it. It's in a sell mode in the monthly. We'll see where it goes. I have an idea where it's going to go, and that's going to fit in. Oh, you see, here I am. I haven't even, for about 3, 4, 5, no, about 3 weeks I've been having stuff here that I've been wanting to talk about. Now I can't even find it. I'm going to do it right this second. One is content marketing. I had spoken a long time. In fact, it's in the book that the chapter that I wrote for Psychology of Investing, my chapter number 13 of that book, published by Wiley, Lifson, and Geist with they put it all together. It's from a series that was done through the Harvard Medical School, School of Psychology, and I was one of the guest speakers quite some time ago, and there were a series of them over a few years, and they put it together as a package with many of the analysts. You've got, what's his name? He does Herr Hubert, does the calculation of all the newsletters, etc. Just a whole bunch of people. Cohen, what was the name? Cohen. Anyway, so I discussed that at some point over the coming years, we will find that there's going to be a blur between content and reality, that news will evolve into some kind of commercial. Almost everything will be commercials. We're going to an age of commercials. I think we're close to being there, number one. The other thing is, I had spoken quite some time ago about Trump I can't remember, I must check it out. I don't know if I actually put it into the final draft, but I had spoken about Donald Trump back in 1999, where I was anticipating that Trump would be the person to build the world's tallest building, thereby making a major top in markets around the world. Well, that hasn't come to pass. But what's interesting is, here you have President Obama, who in so many ways has articulated that although he says he's not an anti-capitalist, a lot of the stuff that he does in many areas are really towards the social programs and really the anti-capital programs, just in the broadest sense, right? This has got nothing to do with politics. This is what he's articulated and what he's done, all right? I couldn't care less which side of the coin you're on. I'm just trying to put it into market perspective. Do I buy or do I sell, okay? So that to me is very important, because President Obama has hardly ever spoken about any stocks he's ever owned, any mutual funds, nothing. That's just not I don't think he's ever done that. It's just not his thing. I wouldn't be surprised if the person who's handling his portfolio on the quiet there is doing extremely well. So the irony, and I bitterly complained about this. I said, why does not President Obama, this is back before the election, the last election, start talking about the stock market, how well the stock market is done under his leadership? After all, that's what you got to do, all right? And the irony is that under this man, the stock market has had one of the greatest bull markets ever. And Trump? We'll talk about that when we get back. Isn't this going to be interesting? I'll be right back. Dow's down 110.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, so we're back, and let me just finish up the thinking here. So when we're looking at the politics, and you remember I've done this forever, where I've tried to call the next potential president. Remember, I said that Obama would be the first black president we've ever had. Then I thought it would be a one-term presidency. Going into the just the last few months before the election, I said if the Dow breaks 12,000, he could have trouble. If it holds 12,000, he could be reelected. So he was reelected. He held exactly 12,000, but I have no idea, because I suspect if it did break 12,000, he still would have been reelected for a number of reasons. And at the same time, what I'm trying to do now is put it into a market perspective. Remember way back, I'd spoken about Bush as the NASDAQ. Remember we did this way back? This is Bush, the second Bush. So I'm looking at this and I'm saying, what an interesting perspective we have. And I'm going to be following up more on this. But here we have a potential for someone to become a president who is a multi-billionaire, but the person who was not very wealthy at all, in fact, not wealthy at all for a senator, President Obama wasn't president at the time, became the president. And then the stock market, forget about everything else you want to talk about, the stock market had an incredible run from the 666 level in the S&P to over 2100. So what would happen, and these are questions that I'm asking, this has got nothing to do with an answer, it has to do with a question. If we get a Trump at the top of a bull market, or what would happen if we get a Bernie Sanders, a socialist, a self-declared socialist? We have to go through that. What about Hillary Clinton? Where are we? Is it right that we go into a major market decline and have Republicans come in and be blamed? Or would it be right if a Democrat got in again and there was a major turn down? Or is this the start of really a mega move? We're going to have a sharp decline now, and then we start a whole brand new move. We'll talk about cycles, we'll talk about a whole bunch of things. But first of all, I want to go right back here. I want to say that crude oil is on its way down. It's down 82 cents. It's getting close to some kind of basing area. That's not to say a base, but a basing area. It's at 44. I suspect in the 40, this is the 1-to-1. The 1-to-1 takes you to 42, around about between 42 and 43. So I suspect within a point or two of at least attempting some kind of a bounce. Question in the den was J and K, for J and J in the den. J and K is making that H pattern. Remember, what are we talking about? H pattern. What H pattern? It's this pattern right here. And you can call it the H pattern if you want, H pattern if you want, or the right shoulder failure. And as I'm looking at it, I'm going to say just a quick example here that you can see it even clearer. There, the H pattern fails and keeps going lower until it makes a rather large H or a V-shaped turnaround. So what we're looking at here is that you've broken support in the weekly J and K, which is Spider Barclays high yield bond ETF. Monthly chart has that Roman candle, Chapman wave Roman candle. You get halfway into that, and you're already halfway into it. It says you're probably going to retest the low, which is 37.26. It's at 37.54. My suggestion is I would not be looking at this at all. I want some kind of a washout. I want a washout with volume. I want a volume climactic reversal. I don't know if we're real close to that, but I'm just telling you, I would not be buying it right now. If I was going to be shorting it, you've got a point and a half, a point or two before perhaps there's a bounce, and you've got this left side low right here at 37.50. It's 4 cents away. I would just step aside, have a little patience. In 2 days' time, we can look at it again. Okay, next question was, would I look at Exxon, Chevron, and RDS? All right, is that Royal Dutch? Yeah. So, okay, let's do the Exxon. So here we are, and Exxon is up 66 cents at 77.83. There's a technique that I use where I combine the Chapman wave with the Elliott wave, and I showed my subscribers the other day that there was a potential in Exxon, in the monthly chart, having made that complete arch formation, broken under the 84.79 level, gone down to a leg F in the, A, B, C, D. A new leg D in the weekly chart. I should put that in here. Let me just put a D. But in Elliott wave, as I read Elliott wave, you've gone down 1, up 2, wave 2, wave 3, wave 4, and wave 5 is unfolding. I don't think that Exxon has made the low. I think we're in the process of trying to establish some kind of maybe an internal low. Just established, I would say, a refueling for a move to the downside, another move to the downside, to maybe extend this as a coda to the wave 5 down. And it could be quite a large arch formation if it does succeed at 77.86, bounces and holds on a weekly chart. That's a whole Friday, a whole week into Friday's close, above 82.50, nicely above the 81.50 9-period moving average in the weekly chart. The daily you can see here has had 2 Elliott wave moves to the downside. 1, 2, 3, 4, 5. X right there starts over again. And then 1, 2, 3, 4. Whoosh, the big 5 down. This is one of the biggest 5s down. So this is saying to me, we could start the H pattern that says we'll have something different to the downside after this, because it's only an It's not an Elliott wave in the sense that 5 is the final move. I just don't see Exxon under these oil conditions and the integrators generally as making a low here without even testing the left side low of 76, is it 70, 77.13 made the week of the 29th of June of 2012. Once the tide is turned with the MACD and stochastic super, bounces are going to fail. Maybe on the monthly chart at some point you bounce to the 83, 84 level, that the breakdown level that was back in October of 2013, where the 9-period moving averages in the monthly. But I don't think it's over. So I think there are a series of moves to the downside. And only when people have just really given up completely on oil, as I suspect they're going to do in gold, even though I can see there could be a little bit of a bounce here, the same sort of thing in the commodity index. So that's Exxon, CVX, same sort of thing. The weekly chart has got a 1, 2, 3, 4, a little complex 2 to 3, but then it goes 4, and we're in 5 now. This steepness says, unless you get a major V-shaped turnaround, I don't see a major turnaround at 2% in the stochastic and flattening out. I see a bounce so that the stochastic can go to maybe 8 or 12% at some point, but then it's going to come back down. I got 78.41 as the 200-period moving average support in Chevron, trading at 84.50, up 40 cents right now. So yeah, this is just a bounce. I'm not sure yet how far it can go. I'm not even sure whether we can call it a bounce, because at this point it hasn't even taken out yesterday's high of 86 round number. So unless Chevron trades $1.60 higher to really take out that 86 level, then the 87.63 9-period moving average to 89.50 in the next moving average resistance kicks in. So it's just the start. It's really a tester. Now, as I said before, people say you cannot time the top of the bottom. Hey, we've timed the top and the bottom in so many things, many, many times. The real issue is holding the position, identifying that you've got the exact top, and then sitting with it and not going in and out and in and out, which costs you. Sometimes in this, some of the situations, we get a cumulative a gain that's really bigger than the gain from the low to the high. But that's rare. Most of the time, you just keep chopping away, make a little bit, lose a little bit, make a little bit more, then lose a little bit. It's hard. Stay in the position, and that's what we try to do. So this is just a little starter position. We've already done that in some of the ETFs that have gone to all-time highs. We've taken positions, short positions at the exact top within a point or two. Hey, we'll see how that works out as well. So, all right. So now I want to get to what's the time. Yep, we've got plenty of time. Just wanted to check my emails for 1 second. This is always a good time. Check. Nothing there. Okay. So here we go. I wanted to do a couple of things here. So crude oil and the commodities, I want you to look at the it's the TRCCI. That is the Reuters equal weight commodity index. See, it broke its 200-period exponential moving average last month and gone this month to a lower low. There's that same pattern over and over and over and over again. Look, there it is. And this candle of last week when I was away on vacation, that was the candle that should have closed near the high, or at least this week we should not have taken out the low. We should be bouncing and trying to hit 412 instead of being at 397. So this is just suggesting that there's really no real strength in the commodities as yet. And one of the reasons is this dollar. Look at that dollar. I mean, it's holding well. It keeps showing technically that this last move up has some strength, but not the major strength it had going to the high at 98.15. Now, what I did last night was interesting. I haven't looked at the UUP for ages. And the UUP is, I used to have it all notated. I haven't got it notated anymore. Something happened. That's okay. The UUP has a different chart pattern to the dollar. It made a new recovery high at an F/B yesterday at 25.68. But the weekly chart, look at this. Keep looking, keep focused here. Look at that middle chart. Here we go. I'm going to switch it. Keep looking, keep looking. Here we go. Different. You see, there's a slight difference in the dollar weekly chart. It has just sneaked to 98.15, 98.22. snuck to leg C, but it's a gray C because it's underneath the previous high of peak E at 100.39. But so far, the technicals are rallying, not great. The MACD has not turned positive, but it has turned up. The histogram hasn't turned positive, but it's already at 0.11, minus 0.11. So it's close. But I'm looking at this and I'm saying that's the reason why there's a chance right now that the fear factor might creep in. Let's look at the XLF to see what's happening in the bank sector. See, the banks are giving up. There's that H pattern once again. Over and over. Just learn these patterns, folks. Really, I do think you will just find it so beneficial. You don't have to trade off them, but you're aware that there's a possibility there could be a right shoulder failure. A right arm extension is when one of the technicals is running stronger, the other isn't, and the price goes to an all-time high. That could fail. This is different. This is saying there's a complete failure in the bank, the XLF, the S&P Select Financial Spider Fund. At this particular point in the technicals, the price is actually held quite well. Technically, if I was looking at this, I would have said, oh, it must be underneath that low of 4 days ago of 25.01. It's at 25.16. The day is young. You never can tell. But anyway, that's what let's go to Lou in Nashua. Lou, how are you?
How are you? Thank you.
Good.
Fine, thank you. I was wondering if you could look at Nugget.
Okay, so NUGT is the direction, daily, gold mines. Don't forget, folks, go to the front page of TFNN, check out direction shares. Hey, while you're at the front page, check out Tom's new offer coming up. I think it's in a week, a webinar coming up. There are a lot of things going on. So let's look at NUGT. Do you mind if I just look at, I just want to see, Nugget is the gold miners. So if you don't mind, Luke, can I just look at the XAU? It's a closer representative, I think, than just looking at the gold right now. See, the XAU, yep, it is. The XAU suggests to me that this is an attempt to find some kind of support at 45.68. We're looking at the Philadelphia Gold and Silver Sector Index. The weekly chart is just terrible. It's gone straight. It hasn't, now it is so far away from the 9-period moving average, and it hasn't crossed the 9-period moving average since it broke down the week of the 22nd of May. So that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I don't think there are too many people around who have seen 11 weeks of declining XAU. Maybe this is it. No, 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, 11 weeks. I mean, this is amazing. So every week you could have said, oh, there has to be a rally this week. Come on, you can't do that. But let me just go to the monthly chart. Now, Lou, I don't know if you can see the charts if you're able at the same time, but the 63.42 October 2008 low in the XAU right there went to a peak D in December of 2010 at 232.72. And then it came down, making a whole series of these arch formations. The last one broke down and it's done almost a one-to-one to the downside. The way the MACD is looking, there is a little bit of support here that says, I'm doing my best to try to hold up the gold, but it's not working. So do you have a position in NUGT in Nugget?
No.
Okay. Okay, I'm going to have to think this through because I want to give you, I know you're like an exact answer and you don't mind stepping away if I think it's not going to be working. Let me think it through and I'll give you the answer when we get back. And then I'll also go to Brent in Martinez and we'll look at price now. Thanks for holding, Lou. I'll be right back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. Let me just do this real quickly. I'm going right back to Lou. But first of all, Tree, T-R-E, Lending Tree, had a fabulous call about a month or so ago, and we were looking at it, and the caller wanted, she was in it, and it looked, I gave her this, a shorter term thing, and said it still looks very strong in the weekly. Wow, it went all the way. She called in the 70s or I don't know, 50s or something. It's at 115. This is peak D. I'm going to recommend you take a little bit off right now. Leg D, possibly peak D today in the daily, leg D in the weekly, leg E in the monthly. Not a bad time just to take a little bit off. Next question was the yen, and I'm going to do that real quickly. The yen, I think it's going to go higher, leg C in the daily, so it's going to go higher. I think it's going to test the high of the week of the 5th of June. Then you've got to be a little bit careful, and that takes me straight back to Lou, because Lou, I think we are real close to another kind of an arch formation bounce in the gold. So I'm going to say to you, I know that you like to. Well, are you going to use options? Or are you going to use options or straight into the into NUGT?
Straight into it.
Okay, at $3.18. Got to be real careful because percentages are real tough. I mean, if you go to the low of the day today at 296, that's already a big percentage. I know you understand that. I'm going to suggest just a little nibble here. And if it does go to 349 in the next 2 days without taking out today's low, and then pulls back just a tad, you can add just a little bit more. But all of it the total should still be a small position because you're really trying to time the bottom here. So just a little bit, and I would have a fairly tight stop. I don't know what your position would be, but under 296, I'd say, too early. So I hope that helps you.
Yes, it does, Basil, as usual.
Thank you very much for calling. I appreciate that. Let's go to Brenton Martinez. Brent, how are you?
I'm doing just fine, Basil. How are you today?
Good, thank you. Leg D, price line, just gapped up on news yesterday. I'm afraid of these stocks. So many have gone to leg D, E's or F, gapped up, and then they started to fill the gap. But in this case, price line, monthly chart is still very strong. So is the weekly. Do you have a long position, or are you starting to look at the short side?
No, I shorted it yesterday at the open. It's kind of, you have to have fast fingers. The thing.
Very, because this is a $1,348 stock. Now, if you didn't use options and if you did it purely on the stock, you want to see at 1348 right now, just down 3 points. You want to see 1325. Well, you want to see that taken out by Friday afternoon. If it hasn't done that, I wouldn't hang around too long, because this is what the fund managers are going to gravitate towards the stocks that under these conditions are still holding real well, and this is holding real well. I am nervous about the gap. I think you got the same position I would have probably wanted on a short-term basis, but don't let it get away from you. A close above today's high, I'd probably say, you know what, too risky.
I agree. One quick note about Nugget and those leverage products.
Yes.
When they've been in a consistent trend the wrong way, they almost always reverse split, so you got to be really careful with them.
Oh, absolutely. We know that very well from the TVIX, which we trade, and it's only on days like this where occasionally they'll give you a very nice boost, but absolutely. And I think Lou is aware of that. Hey, thanks for the call. Thanks for the information, Brent.
All right, have a great day, Basil. Take care.
You too. Folks, before we go to Larry Pesavento, oh, no, we don't, of course. Oh, God, get used to these times. We've got Daryl coming up. We've got great programming all day. Let me just show you something. The VIX index, nice move up at 1398. The fund managers were just ignoring it. Now they're getting excited. Now we can start to look at it on a weekly basis. We've seen this before, where Thursdays look great and then Friday just whacks it down again. I think this is serious. One of the reasons why we went so heavily in the long position, even though we did add in the short position, and we did add just one stock to the long position this morning, which is acting very well. I'm going to suggest that you've got to be real careful here. This is, I think, I heard Tom talk about a rug pull. I think we're looking at a rug pull. Absolutely. I agree with him 100%. Folks, have a great day. Check out my opening calls. Some real nice calls we've got there. And at the same time, stay tuned at TFNN. I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.